So, what is the difference between the lender, the mortgage holder, the servicer, and the trustee? This was a question for Cheryl that came in. I know we're using a lot of terms here.
Okay, the lender is actually the entity that loaned them the money. That would be the actual lender. And then there was the mortgage holder, would be the borrower. I would understand.
And then the servicer and the trustee.
The servicer is, in many cases, the servicer may be the same as the lender, but there are cases in which the people that the borrower makes the payment to doesn't actually own the note. So you might have the borrower got the money from Reunion Mortgage, and now they're making a payment to Bank of America. Bank of America is servicing that mortgage, but it might still be owned by Reunion Mortgage.
We have a question from a retired senior citizen, age 73. Says, I have an interest-only loan, unsecured debt, and alimony that amounts to over 50% of my income. Where can I get help to consolidate and reduce my obligations? Anna?
If the question, if I'm understanding it correctly, is regarding debt consolidation,
yes.
A lot of the HUD-approved counseling agencies that I know of don't do debt consolidation in-house. They can contact their local consumer credit counseling service, which they can obtain a local referral from their HUD-approved counseling agency. Also, they can come in and see and talk to a HUD-approved counselor, okay, to do the numbers, do the budget, look to see what's there, and explore what other options they have.
And how do you find that HUD counselor?
Most of the times, contacting HUD. HUD has a list of current HUD-approved counseling agencies and all the services they offer. That is, I would have to say, the best way to find
so you can go online, contact HUD.
You can go online, you can call them. That is the best way to get the most up-to-date HUD-approved counselor. And they have the list of counselors that they have approved. A lot of times, you know, going to the issue a little bit of fraud, a lot of agencies are saying, I'm HUD approved, we receive funding from HUD, and then we as counselors who belong to actual HUD approved agencies receive emails from HUD stating there is this website, there is this entity out there who is not true. We just want to make you counselors aware for when your clients come and mention it to you.
And Martin, what will that counselor do for this individual?
Well, I think these days the focus is primarily on the Obama plan, which means the loan modification, and that seems to be the central approach these days. And it's a very complex formula, but basically it looks at the homeowner's income versus their debts. It's called a debt-to-income ratio. And the purpose of the whole program is to try to reduce that ratio to a manageable number, ideally down to 31%. And in that case, then the modification is required. And the lenders that participate in this plan are supposed to be required to make this analysis, look at the application, and reduce the payments or reduce the interest to a level where this debt-to-income ratio is manageable for the homeowner. And if the homeowner has other debts at what's called the back-end debts like alimony or child support or credit card debt, then part of the job of the counseling agency is to sit down and have a heart-to-heart talk with that homeowner and say, you may have to give up that car, you may have to give up some of the other items you're spending money on if you want to save the home. Or if you want the car, if you want the stereo, maybe you should let the home go. But ultimately, a lot of what we're doing these days is this budget counseling, trying to get an accurate picture. We pull the credit reports. So the homeowners who sometimes try to finesse their budget are going to get caught either by us or by the lender because everyone's looking at the credit reports and the other data. But sooner or later, that homeowner is going to have to reduce that debt percentage to an acceptable level in order to get the modification.
We'll hear more from our panelists in just a few minutes, but we want to remind you that if you're facing foreclosure and you need help right away, you can call United Way's 211 service.
Can you tell us a little bit about what is 211?
211 Santa Clara County is 24-hour-a-day, 7-day-a-week information and referral service available by telephone, which is, if you're in Santa Clara County, dialing 211.
You can find home, shelter and food and all kind of medical care. You have referrals for all those things?
You can find anything on 211. The database in 211 has more than 850 agencies running thousands of programs. So, for example, if you're facing foreclosure, if you're a homeowner and you're in trouble with your mortgage, you call 211 and you can get referred to programs that will help you with that. If you're a renter and you believe that the owner of your property is facing foreclosure, perhaps you don't have a lease and you're worried about what are your rights, what are your options, you can call 211 for help there. If you've been evicted through either foreclosure or because the owner of your property has been foreclosed upon and you need emergency shelter, call 211 for that. Often, families that are facing foreclosure are also finding that they face other needs, other critical needs. So, food pantries, where can you get some help putting food on the table? Utility assistance, how do you get help paying those bills? Prescription medications, that sort of thing. All those resources available by calling 211. 211 will pinpoint for you where you are and what help is available nearest to you.
Now, who can call? Is there an eligibility criteria?
Anyone can call 211. You or I could call today. No eligibility requirements, no need to give your name. 211 will ask you some basic information about where you're calling from in order to help you. They'll also record any particular language needs. 211 is available to be translated in more than 170 languages. On a routine basis, in the course of an average month, we'll get callers speaking up to a dozen different languages. And we have readily available translation services for folks. So anyone can call, anyone can take advantage of the service, and it's always available. It's never closed.
We've teamed up with community partners like the United Way to connect you with resources, and representatives from our partner organizations are taking your questions now at 1-800-771-KTEH. You can also email us a question at mortgage@kth.org. Here's another question that came in from our website. Jill in San Carlos wants to know if she's throwing money away by continuing to rent, and is this a good time to buy? We've been talking about the downside, but there are some positives with home ownership.
Well, certainly
many
affordability has never been higher, I don't think, in any recent history in the state of California. So if somebody looks hard at everything, and like I think Anna always recommends counseling, looking at the whole the whole budget.
Yeah, the whole budget. I mean, us at Neighborhood Housing Services, we do pre-purchase counseling, and we are familiar with all the first-time home buyer programs. So definitely, if it's something that person is interested in, I would suggest they talk to their local HUD-approved counseling agency. Many HUD-approved counseling agents do know pre-purchase programs and do know those first-time home buyers available for those who are interested in buying in this market.
So you actually conduct seminars for first-time home buyers, so you can learn how to navigate through this maze of paperwork,
as well as we do for those who are having trouble with their mortgage. One of the key things in this entire process is education. Many people aren't educated on the process, don't know about the foreclosure timeline. Many HUD-approved counseling agencies will offer monthly or even more frequent foreclosure intervention education classes where the buyer or the borrower can go learn how to talk to their lender, how to write a hardship letter, how to negotiate with the servicer, to really empower them to be able to begin the process themselves, because unfortunately there is a wait for HUD-approved counselors.
We have a question. I have a large adjustable rate mortgage, but I want to reduce my monthly payments and lock in a rate. I tried to modify, but they wouldn't let me without a, quote, qualifying event. Now I'm unemployed and cannot refinance. What are my options? Define, first of all, qualifying event.
I think probably by qualifying event, I think they mean some form of hardship. Certainly losing your job is quite a significant hardship.
So a significant change.
A significant change. I think the Citibank is the only entity that I'm aware of that specifically set up a program with greatly reduced monthly payments for borrowers who are out of work, but otherwise without some form of employment, some form of or unemployment insurance benefits, or some other form of income coming into the home. it's going to be impossible to get a modification. And one of the things we do when we're working with borrowers is to talk to them about ways in which they can develop their income and stretch what little income they are able to get.
Here's a question, advice for those with jumbo loans, who can help? So these are very large loans.
Yeah, unfortunately, the government programs are all sort of geared to the FHA limit of 729. So when we've been talking here at this evening about making home affordable, almost all of those programs are actually capped at loans at 729. There are lenders which have their own proprietary programs, and if you have a jumbo loan, the first thing you should find out is if they have a proprietary program rather than getting channeled into making home affordable, which won't work for you. And now if you have a Freddie Mac or Fannie Mae loan, you should be eligible for making home affordable no matter what.
And can you briefly explain the different types of modification?
Well, again, everyone's just sort of, in one way or another, looking at the making home affordable model, which means essentially, first of all, under that program, the lender is first to look at reducing the interest rate down as low as 2% to see if that will get the get the homeowner down to that 38 to 31% level. If not, they're supposed to forbear the forbear the principal and postpone that. They're also supposed to amortize some of the late fees and deficiency fees so that those can be moved to the end of the loan. And then they're supposed to look at extending the loan period up to 40 years. What they're not required to do, and I think Kevin already mentioned this, they're not required to forgive the actual principal, which would be an important final step. They can voluntarily do it, but frankly, I don't think we're seeing that at all or very much. So those are the steps. Reduce the interest, amortize the deficient amounts, forbear principal, and ultimately see if that gets the person down to that range.
We have a question. What is the most important thing to know about buying a foreclosed home? There are many homes on the market at very appealing rates. What do you need to be aware of?
You need to be aware of the physical condition of the property, first and foremost. You can check public records to see if it's been cited by codes before, is one method. Certainly hire your own inspector if you're serious about buying this property. I've talked to people who have gotten into properties that have turned out to have tremendous problems that have meant that the house was basically not worth any of the money that they put down for it. So do the research ahead of time, get an inspector. It's probably the biggest deal.
One of the things we're seeing are neighborhoods that are declining as a result of one or more foreclosed homes. So if you're in that situation, you've been paying your mortgage, you're paying your taxes, you're doing everything right, what do you do then? You're in a neighborhood now that is deteriorating, and possibly crime is coming in and some other issues.
Well, I guess I would say, and it may be counterintuitive, that people should look to advocate for foreclosure prevention policies, because people's impulse is to say, well, I'm making my payments, why should we be directing resources to people who aren't? You know, I was responsible and they are not. But the reality is that if there's a foreclosure in my neighborhood, I lose property value, which means that I'm more likely to go into foreclosure. The local government has less tax revenue for city services. If it's a vacant property, then it might be a source of criminal activity or nuisance. So it's really we think it's in almost everybody's interest to do all we can to prevent foreclosures. And so for those who are kind of on the sidelines watching this downward spiral, for people to get involved, because again, from our perspective, the solutions that we have in place are don't go far enough in pushing the strong financial institutions to do more of what they should do. It's almost like we have kind of a pretty please policy with the banks, and we need to all get behind and support the president to be more aggressive in creating the kind of accountability that will keep people in their homes, maintain property values, keep the tenants in there, keep kids in their schools so they don't have to move, et cetera.
Cheryl, do you want to respond to that, though, on behalf of the mortgage industry, for example? Should there be more rules, or should they sort of self-regulate?
I think there definitely needs to be oversight. A lot of us in the industry feel that, you know, every day there's a new rule. It becomes somewhat difficult to combat. And even prior to this crisis happening, there were rules in place where a lot of the lending that took place shouldn't have happened, but it's the policing. It just doesn't seem to be that there's oversight. And even some of the things that they've created, like, you know, talking about the makinghomeaffordable.gov, some people aren't happy with what's coming out as far as results. And Obama does want to see more transparency in that, and he has in fact started publishing some reports of the lenders' names and how many percentage, and I think, like he says, consumers have to come out there and make people accountable.
We've seen one of those reports, I believe, 130,000 modifications over a potential 3 million foreclosures this year. So the percentage is rather low.
I mean, it is a new program, and I think that we do have to give it a fair shake. And I kind of liken it to, if you look at how long it takes to process a loan, it's not unusual for a loan to take 90 days to process. Sometimes, you know, longer. So for a modification to take that long, especially when lenders this kind of came upon them quickly also, really they weren't prepared for it. And so give it some time.
Yeah. A reminder, our panelists and our phone bank of community partners are answering your questions about the mortgage crisis. So please call us at 1-800-771-KTEH or email us at mortgage@kteh.org.